We in February. Now, February is the tax year end for individuals, which means there's certain opportunities one needs to look at and certain tax benefits one needs to harvest as far as possible. Let's start with retirement products. What should one look at?
Absolutely, Theo. I think the first thing to understand about retirement funds is that the law allows us to contribute 27.5% of all our taxable income to a retirement fund. For those that are earning a substantial income, that is limited to 350,000 Rand a year. The important thing to understand about retirement funds is you get this huge deduction from SARS for making an investment on your behalf for yourself, for your retirement future, but also all the growth inside a retirement fund is tax-free. There's no income tax, no dividends tax, and no capital gains tax. The only time you'll pay tax again on a retirement fund is when you retire it one day and you decide to draw an income. You'll pay tax only on the income that you're drawing out or on the lump sum that you've taken out of your retirement fund. So I think it is a great vehicle. Just make sure that the costs of your retirement annuity are low and that you're in the right asset allocation and the right mix of investments. At the moment, there is quite a bit of concern from investors about the ANC's election manifesto, where they spoke about prescribed assets, and it is a concern. It is something that we need to monitor. I don't think we should change our behavior now as investors because there is still a very good chance that nothing will happen with that. All they've said in the manifesto is that they are agreeing to investigate it, and that's a critical point. And secondly, we've seen the unions towards the end of January start waking up to the dangers of something like prescribed assets and starting to oppose it. So I think from a political point of view, it will be a real poison pill for investors to swallow. And for the ANC, there is no danger or no limit to them getting money from pension funds and fund managers for state-owned enterprises, provided they are well managed. So I think that this will be an issue that will die, but if it doesn't, we'll have lots of time before this legislation gets implemented to start making changes. So take advantage of your retirement fund contributions and get that done, I think, around about the 15th of Feb at the latest, so that you get all your money transferred before the end of the tax year.
Now, once you've utilized the benefit within the retirement structures, the second one should look at is tax-free savings accounts. What does it imply and where should one look at that?
So then we come to tax-free savings. It's not a huge investment for a lot of our clients because the law only allows you to contribute 33,000 Rand per year to a tax-free savings account, but it's definitely something worthwhile doing. Over your lifetime, you can get to a limit of 500,000 Rand as a contribution. That might change in the budgets ahead, but for now, that's what we know. And just to understand it, you get no deductions from SARS for making a contribution, but everything inside that investment grows tax-free. And when you draw the money out again one day, that's also tax-free. As a business, we really like tax-free savings accounts, and we like to use listed property companies as a vehicle for tax-free savings because all the rent that property companies generate is normally taxed at your marginal tax rate. So now you're getting that income tax-free. It's been a terrible year in 2018 for listed property, so a lot of people will be really bleak about the growth that they've had, or I should say the losses, no growth. But we would say to investors, stay the course. The value is there in the listed property sector, and it's certainly something to take advantage of. If you haven't finished your contribution for the tax year ending in February, then make sure that you top up your tax-free savings account now, and at the start of March, make sure that you get that going for the new tax year.
Warren, and then there's the foreign allowance with 2 legs. That's based on a calendar year. The one you apply for, but the other one is within your travel allowance, which is almost a discretionary allowance.
Yeah.
What should one focus on that element?
So you're quite right, Theo. I mean, I think the discretionary allowance that we allowed every year is R1 million per person over 18 years old for a husband. So that means for a husband and wife, they can send out R2 million a year without having to go through the process of applying to SARS. Your allowance starts on the 1st of the year, and the 1st of January ends in the calendar year. So for investors who don't have enough money overseas yet, it's certainly something we think they should be taking advantage of. Just to note that we think the target range for the Rand dollar should be somewhere between R13.50 and R13.90 to send your money out of South Africa into dollars and into the international markets. So don't be too pressurized if the Rand is weaker than R13.90. In other words, if it's at 14 or 15 Rand, just leave your money and don't send it out then. But when it comes into that range, if it's appropriate for you, use your discretionary allowance and get your money out. The only trick there is if you plan to do overseas holidays, don't use up your entire discretionary allowance on investments because that is part of your travel allowance. So it's something that we like it very much. We think it's an easy and convenient way to get money offshore. Just use it carefully.
Warren, thank you very much. I think the key principle is one needs to pay tax but also use the benefits within tax legislation. And that's specifically where you need, within the month of February, to contact your advisor and make sure that you utilize those benefits that are specifically there to encourage savings. My invitation is, please contact us, contact your advisor, and make sure you make the most of February.